All right, welcome back to accounting chapter 5 here. We're looking at 5.5 where we're looking at periodic inventory, but this time we're looking at the LIFO costing method. So again, yesterday we talked about how to use the FIFO method, which I gave an example of a grocery store. Typically, when you are at a grocery store, you have things that have perishable goods or have expiration dates. So you would definitely want to sell all of your expiring foods that are expiring sooner first, and then the ones that are not expiring until later, right? You shelf it that way,
And
right?
with restaurants, they do the first in, first out method also.
Oh yes, because they're dealing with food. Yes, absolutely.
Mhm.
And then today we're going to be taking a look at LIFO. Now, again, I gave you the example of a cell phone store, right? Usually they will release four, five, six, seven different models. They'll have it available, but usually you're going to have the tendency of your newest, latest, and greatest model being sold first. Okay, because again, it's the newest one that just came into the store. Again, I gave you the example for the iPhone 11, 12, and 13. People are more likely going to buy the iPhone 13 over the other two because people want the latest and greatest products. So that's going to be a great example um, of LIFO, right? Usually people like the sleeker looking model, okay? Even it doesn't have to be a cell phone particularly. It could be anything like a grocery store that sells mops, right? There is like the old mop and then there's a new innovative sleek looking mop. They're both the same price, but at the end of the day, you would more likely buy the more newer looking one because it attracts you. So in this case, that's going to be an example of LIFO that could be applied to different things, except for like a cell phone company, right? And of course, we'll talk about the other two. So again, we'll talk about the weighted average tomorrow, and of course, specific ID. Again, we're not going to have time to teach it, but again, it's very similar to an auto repair shop, right? You're going to have to need specific coding and specific parts for specific cars, right? That's what specific ID is. So again, let's go ahead and dive into LIFO. Last in, first out. LIFO for short. So again, this is going to be the formulas that you will need to know for LIFO. Now, actually, if you take a look at this, it is exactly identical to FIFO. The only difference here is when we calculate the cost of goods sold, instead of going from top the most the oldest batch that you've purchased, we are now going back and starting from the most recent batch of inventory that we're going to start off with. So that's the only difference here, and you can't really map out the calculations there. So in this case, the calculations for solving for the inventory worksheet is going to be the same for both LIFO and FIFO. Okay? All right? So you're going to need to be solving for your purchase price, your total cost, your cost per item, because again, we're keeping the batches of inventory separately. Your goods available is going to be your beginning inventory plus your goods available. Plus your net purchases. And then, of course, your cost of goods sold is going to be your goods available minus your ending balance. So here's an example right here. Okay, for the following items here, you're going to practice journalizing this transaction. So first, right here on June 1st, right, you made a purchase of 100 toys at $1.25 with a freight of 25. So again, we practiced this on Tuesday or Monday, right? You gotta remember it's a purchase expense, a freight expense, and then accounts payable. And then of course you're going to identify what the purchase expense is and what the freight expense and what the total is. Right? So once you've done that, then you're going to pop it into your inventory worksheet, right? And this is where the formulas are going to come into play. You need to determine the purchase price, okay? So in this case, purchase price is quantity times unit price. So again, quantity of 100 times $1.25 is going to give you 125. We need to determine the total cost, which is going to be your purchase expense plus your freight, okay, which is 125 plus 25 will give you 150. Okay. And of course, last thing that we have to do is solve for the cost per item, because this is the most important part, because when we're dealing with LIFO, we need to keep our batches of inventory separate from each other. Right? So the only way to be able to do that is by calculating how much each batch of inventory is going to cost me per item. So in this case, we're going to take my total cost of 150 and divide it evenly throughout the amount of quantity that I have, which is 100. Right? And then that's going to give me $1.50 per item. Okay? So then again, we also made another purchase on June 11th, another 100 toys for $1.28 plus $26 of freight. So again, you plug in all your numbers. And then of course you pop it back into your inventory worksheet. So again, you're going to solve for the same columns here. So you can start off with your purchase price. So quantity times unit price will give you 128. Plus 26 here will give you a total of 154. And then of course you figure out what your cost per item is, which is $1.54. Okay, straightforward, very easy. Now once you reach the end of the accounting period, you're going to be given a number. Okay, that number is going to be someone going down to the basement and taking a physical count of your inventory and reporting to you that you have X amount of inventory items left on hand. So with that being said, once you reach that end of that period, you're going to now need to tally up your totals, because now you're going to be preparing to do the calculations now. So in this case, I made a purchase of 200 units at a total purchase price of $253 with a total freight of 51 and a total cost of 304, right? And these four numbers are going to be what's going to be carried into the bottom half of the inventory worksheet. So once again, here you go. You pop them into the bottom half here. And you're going to notice that here you got the 200 items at $253, right? We're looking at purchase price only. Now, returns for this particular chapter, we're not going to look at, or section, we're not going to look at returns until we hit the Chapter 5 review, okay, where all of your returns and allowances are going to be there. And I'm going to show you exactly how you manage your inventory worksheet by having returns and allowances. So in this case, right now, we're assuming there are none, okay? So that means your subtotal is going to be exactly what you had from your purchases, right? Okay, so then freight adds nothing to quantity, but it does add to cost, okay? So because it increases the value of your inventory, right?
Okay.
Therefore, you have 200 units at 304, right? You add the freight of 51 to go ahead and add it all up together to be 304. Okay? Then the next step is going to be determining your beginning balance. In this case, you don't have a beginning balance. So therefore, you're going to be transferring the information from the net purchases that you saw from above, and you're going to carry that down into the net purchases section. And because you didn't have any beginning inventory, your net purchases will actually become your goods available. Okay? So once you have that, you're going to be given, again, how many items you have available on hand. So this says right here that on June 15, you had a total of 80 toys left on hand. So that means that's going to become your ending balance. So in this case, if you started out with 200 units and you have 80 units remaining, your assumption is you must have sold 120 units. right? So this is where your job is to solve for the total cost of your goods sold. So how do we do that? Well, we take a look at my inventory on hand, right? Or my purchases, my goods available. I have two batches of inventory, one for 150 and one for 154. Now remember, when we are going to be adding in the freight costs, we're expecting that the total cost of the value per item includes all expenses for, or all the costs to have that inventory to your store. Because in this case, we're going to include it into our selling price. So then we don't pay for it, the customer does pay for it. Okay, so instead of having the 120, the 128, it's now 154. Okay, okay, so then we are looking here, and we have two batches of inventory, right? We have one for 150 and one for 154. Now, if you remember the exact dates, we purchased the first batch on June 1st, and then we purchased the second batch on June 11th. So again, that is something that we have to keep in mind, the exact order. Now, if you're going to put it into your spreadsheet from that exact order, it's easy because you're making a list essentially. So in this case, now we're looking at Lifo. How do I calculate using Lifo? Well, which one was the last batch that we just purchased? Which batch of inventory did we just purchase?
Okay, would it be the 154?
It would be the batch for the 154, correct. So in this case, I need to sell a total of 120. Okay, excuse me one second. Okay, so in this case, yes, I need to sell a grand total of 120 units. Okay, and right now I have 200 units available to sell. Now, if I'm using the rules of LIFO, I'm going to sell my first 100 batch at $1.54. All right, I'm going to get rid of my first 100 items there. Okay.
Right.
So then after I've done that, then I have to sell, I need to sell a whole grand total of 120. So once I remove that batch of inventory, right, therefore I need 20 more units to sell. So 20 units, then you're going to go ahead and go to the next batch available. So in this case, I'm looking at my only batch because in this case, I already got rid of my last batch. Now I'm up to my first batch here, and it's currently at $1.50. In this case, I'm not taking 100 items. I'm only taking 20. So this is where you're going to actually have to calculate the cost per item, right? Because I want to know how much it's going to cost me to sell just 20 items. Okay? So 20 items at $1.50 will give me a total of $30. Okay? So that means my grand total for 120 units is going to be the combination between the 154, which is my first 100, and then plus additional 30 from the 20 items I just sold from this batch here. All right? So therefore, I need to now solve for my ending balance because I know that once I take that 20 units out from my inventory available, goods available, right? I'm going to have 80 units left remaining. And that's exactly how much I have for my ending balance. Now in this case, you have two ways to solve it. You can either solve it by taking 80 times $1.50, which should give you 120, or I could take my goods available, which is 304, right? I know for a fact that at the end of the day, that's exactly the total cost I have available to spend. And if I were to, again, take that 304 and subtract the 184, you'll get the same exact answer of that 120. So it doesn't matter which way that you want to solve for it, you're able to solve for it that way as well. Okay? All right, so far so good. So notice this, right? When we're calculating our LIFO, right, we're starting from the bottom and making our way up to the top, right? We're going to we're going to calculate and costing our inventory based on the most latest inventory that we purchase. Now, it doesn't have to be the most expensive, but it usually, with time, you're going to notice that you're going to get a fluctuation between the price points of your items. And that's just how the market is, right? Because of supply and demand. If you are short, if you have too much supplies and not that much demand, then the price is going to be lower. But if you have too much demand and less supplies, then the price of the unit will go higher. So again, this is just a fluctuation between the toys, and you're never going to get a constant number going in unless you're buying it literally every day or you're buying it all at once. But that's just how business does, is that it usually fluctuates over time. So in this case, it's not necessarily the most expensive, but what I'm trying to show you here is that your generally rule of thumb is you're going to be taking the last batch that you just recently purchased and then slowly make your way up to the top of your older batches, because we don't really, it's not perishable, so there's no real meaning to why we sell our latest first. Okay? And there you go, right? So once you've done that, right, then we can move on to the next part. Any questions?
We're good.
Okay. So then again, we talked about this yesterday, right? Every time you complete an inventory worksheet, you are obligated to also have a follow-up journal entry. You need to complete the periodic inventory conversion entry, right? So once again, at the end of the period, once you've done your worksheet, you need to convert your expenses into your assets and your cost of goods sold. Why? Because in this case, let's think about it. You purchase, right? You purchase a total of 200 units, right? But once you reach there, usually at the end of the accounting period, you close out your expenses anyway. So can you say that I closed out all 200 items?
No.
No, right? Because you already calculated from the inventory worksheet that you had 80 units remaining. So what you're going to do is you're going to transfer those 80 units into the inventory, and then you're going to transfer everything that you sold to the cost of goods sold. So that's essentially what you're doing with this conversion entry, is you're converting your expenses into inventory and your cost of goods sold, right? So again, I used the buckets scenario where when you make purchases of inventory, you're going to have a bucket called purchase expense and a bucket called freight expense. You're going to put all your items in there. Now, as you sell your items, you're going to be putting them into the cost of goods sold bucket. And then when you have all left over, then you're going to put that into your inventory bucket. This is exactly what this journal entry does. It just transfers the amounts into the respective columns at the end of the accounting period. Right? So in this case, right, we've already solved for our numbers. So all we have to do is just lay out the journal entry and plug in our answers. So in this case, right, we know what ending inventory was, right? We solved for it. We had 80 units left behind. So therefore, it cost me 120 units, or $120, excuse me. How much was the cost of goods sold? Well, at the end of the day, I sold 120 units at a grand total of $184. So therefore, popped it in there. What was my total purchase expense? Well, I bought everything, my 200 units, at $253. So I popped it in right there. And then last but not least, my freight expense, which is separate. It's a separate cost to inventory, right? We recognize that from the very beginning. So here, we're going to take that $51 and then put it there. Okay? All right, so that's the conversion entry. So what happens when we actually have beginning inventory? Well, in this case, right, when you're dealing with a business, you're always going to continue doing your operations on the day-to-day basis. Meaning, once you finish your accounting cycle, guess what? You got to start your accounting cycle all over again. Same thing with inventory, okay? You have leftover inventory. Your leftover inventory is going to become your beginning inventory that you're going to start the month or the week with. So in this case, on June 15, right, we already know that we had a total physical count of 80 units, costing a total of $120 on hand. Because that was your ending inventory on June 15, that automatically becomes your beginning inventory on June 16, right? You're carrying it over to the next accounting cycle. So in this case, that is something that you have to acknowledge, is that you have beginning inventory. So again, we reserve the inventory on hand section in our inventory worksheet for our beginning inventory. Okay, it's not meant for anything else. It's only for inventory on hand. Straightforward. So in this case, I'm carrying over my 80 units that I carried from my previous inventory worksheet and popped it into my inventory on hand at 80 units at $1.50 at a total cost of $120. Okay. Then we continue with our purchases. So our next scenario was that on June 18, we made another purchase of 100 toys at $1.27 with a freight of $25. So then we're going to rinse and repeat and go ahead and go through the formulas again. So starting with purchase price, right? Quantity times rate, or quantity times unit price, is going to give me 127. Total cost is going to be your purchase price plus freight will give me 152. And then cost per item is 152 divided by your quantity, which is 100, will give you $1.52. So again, same thing's going to happen to the next scenario. So as we make our purchases, that's what we're going to do. We're just going to tally them all up in our inventory worksheet. So again, June 23rd, you had made another purchase of 100 toys at $1.30 with a freight of 26. So same thing there, same thing there, and same thing there, right? You're going to solve for each column. Now that I know that for my scenarios, I usually typically end off at the end of the month. So in this case, on June 23rd, the next following thing is that you should be told how much you should have at the end of inventory. Once you get that number, then you're going to say, okay, I need to tally up my totals because this is going to be what I purchased, okay? So in this case, I purchased 200 units at $257 with a freight of 51, which gave me a total of 308. And once again, those numbers are going to be transferred into your inventory worksheet. Now, here's the difference. Once I get that through, right? Next thing is, do I have beginning inventory? Yes, I do. So do not calculate your beginning inventory including into your net purchases, because your net purchases, what you bought, is different than what you carried on hand, okay? So in this case, we will eventually calculate, but the first section is just looking at what you bought during that accounting period. Then the second half is where you're going to now introduce the inventory on hand. So in this case, we do have beginning inventory. It was the 80 units at 120, right? And then you're going to carry your net purchases down. So then now you're going to get a grand total of goods available, which in this case is 280 units at $428 even, right? Because again, you carried your purchases of 308. You're going to add that to the 120, and you're going to get a grand total of 428, right? And this is the total amount of inventory items that you have available to sell, right? You have the 80 from the beginning, and then you have the 100 that you purchased on June 18, and then you have another 100 that you purchased on June 23rd, okay? So again, once you're given that you have 60 units available on June 30th, right at the end of the accounting period, then you need to do the calculations, right? If you started out with 280 units and you only have 60 units left remaining, then your assumption is you must have sold 220 units, right? So then now we need to solve for our cost of goods sold. And we're going to be using the rules of Lifo now, okay? Starting with the most last recent batch of inventory that you purchased. So in this case, which one is that going to be? 100 at 156. Now notice this. Why is my beginning inventory the first thing on the list? Well, like I mentioned, right? If you're transferring that from the previous inventory worksheet, it's going to be considered as your inventory that you had or you purchased in this case as of June 16. So therefore, that's going to be your first batch that you had that you carried over from the previous one. So that's the idea there, is that when you do have beginning inventory, what happens is it's the first thing on the list, and then you make your purchases following afterwards. So in this case, it's very date driven. It's very, you want to make sure that you're keeping track of the date, but you want to know what came first and what came last. So in this case, you're going to treat your beginning inventory as the first batch of inventory that you have on your inventory. So you don't put that last, so you don't put that later, and and so on and so forth. So in this case, yes, now that we recognize using Lifo, right? The most recent batch that I just purchased was on June 23rd for that 100 items at $1.56. So that's exactly what you're going to do. You're going to eliminate that first batch, okay? I need to get to a grand total of 220 units. I only sold my first 100 units. So which one am I going to sell next?
The 100 at 152.
We have another 100 batch at $1.52. So in this case, I'm going to eliminate that one too. So boom. So now I have 200 units that I've sold. I need to get to a grand total of 220. So how many more do I need to sell? 20. And I only have one batch of inventory left, right? My beginning inventory. So in this case, 20 units is what I need at $1.50, because that's what it cost me. So I need to multiply those two together to get another $30. So in this case, the total cost of goods sold, once I sold all 220 units, it's going to give me a grand total of $338. And boom, my ending inventory is my 60 units left remaining at $1.50, which gives me a total of $90, right? Or if you choose to take the 428 minus the 338, you're going to get the same $90. Okay? Any questions so far?
No.
Okay. When then, of course, you do the conversion entry. Now you need to recognize two things, right? You're going to recognize that you have your ending inventory, and you're going to also need to recognize that you have your beginning inventory, right? Because the idea of the cost of goods sold and the goods available is, especially for the goods available, we're combining everything that we have available to sell. So including all your purchases, including your beginning inventory. So that's exactly what you're doing right here on your credit side, is that you're taking your beginning inventory, you're combining it into the pile, and then eventually at the end of the day, that beginning inventory is just going to be transferred back into your ending inventory. Okay? So that's something that you need to know when you do your journal. Your ending and your beginning inventory accounts are the same. Okay, I'm only going to give you this opportunity to identify that one is for the beginning and one is for the ending balance. Okay. All right, chapter review. Right, we talked about purchases of periodic inventory and the conversion entry and the different costing methods. Okay. So again, when we do tomorrow, when we talk about weighted average, I will show you a comparison between all of the three methods. Okay, and give you a I guess a review on a shortcut that you could be able to utilize for your calculating the cost of goods sold. Okay, so let's go ahead and dive right into the inventory example here. Okay, so again, these scenarios are exactly the same. Okay, only difference is the type of costing method that you're going to be using, so your results will be different. Okay, so number one, your inventory method is periodic and it's Lifo. So again, on April 5th, you're gonna purchase 1,000 units at $5 each with a freight cost of 100. Okay, so for this class, if you want to, you can go ahead and practice journalizing. We could do that for the second half because we've been practicing that exact same those exact same numbers from 5.1, 5.2, 5.3, 5.4. They were all the same. So in this case, we could practice that with the other half of the inventory, okay? Or the other half of the scenario because they're different numbers. But at the end of the day, it's rinse and repeat. It's up to you if you prefer it to have for practices, for practice purpose only. But what I really want you to get away with is mastering and understanding how to use the inventory worksheet, right? So this is what I want you to practice with more so than journalizing. Because again, journalizing is rinse and repeat. So in this case, for the first scenario, I'm not going to journalize anything. And we could practice journalizing the second half later. Okay? So number one, all right, so here on April 5th, we purchased 1,000 units at $5 each with the cost of $100. So go to my inventory worksheet is April 5th. We got 1,000 units at $5 with a freight of 100. Okay. Now again, I left these spreadsheets to be unformatted. So however you like it, go ahead and format it. Okay. So in this case, I need to solve for my purchase price. So what's the formula for purchase price again?
Quantity times unit price.
Quantity, so 1,000 times $5. Again, I'm self-referencing. Will give me $5,000. What's my total cost? What's my
Purchase price plus freight.
okay? Which is will give me 5,100. Now I need to solve for my cost per item. Okay, so in this case, total cost divided by my quantity, which will give me $5.10. Okay. So for the second one, I have April 10. We end up purchasing 750 units at $5.75 with a freight of 75. So again, if you are an expert at Excel, you are actually going to be able to solve this a lot more quickly. Okay. Again, I taught you yesterday how to click and hold and drag a formula. Okay. So if I were to click and hold and drag a formula, all I have to do is just enter in that I have 750 at $5.75, and it will automatically fill in and calculate for me. So again, Excel is a very powerful tool that can help you get through this a lot quicker. Okay. We had a freight of 75, which should give you a due total cost of $4,387.50. And then I need to solve for my cost per item here. Okay, so what is $4,387.50 divided by 750? What's my cost per item here?
$4,587.50.
No. I'm asking for the cost per item.
Ah, okay.
Can you tell me the formula for the cost per item?
Total cost divided by quantity bought.
So your total cost of $4,387.50. We need to divide that by 750 items, right? Because we need to know how much it's going to cost me for every single item that I sell from this batch in particular.
Would it be $5.85?
Nope.
No.
No, I did a typo there. $5.85. Good.
Okay.
Good. So that means every item, if I have to come to a point where I need to only sell 50 items from this batch of inventory, it's going to cost me $5.85 per item. Okay? All right. Let's see. So here, now it is April 20th, and we purchased 200 units at $6 each, with the freight costing $20. Right? 200 units at $6 each is going to give me $120. Okay? Plus $20 of freight is going to give me $12.20. So in this case, what is going to be my cost per item here?
$6.10.
$6.10. Good. All right, last but not least, on April 25th, we end up purchasing 500 units at $6.25 each, with the freight costing me $50. Okay. Right? You get 3,125 plus $50 of freight gives you 1,000 or 3,175. So what's my cost per item going to be here?
$6.35.
Good. $6.35. Okay. So once we get here, now it's going to be given that on April 30th that you have a total of 600 units on hand. Okay, 600 units on hand. So that means that's my leftover ending balance. Okay. So in this case, that means I reached the end of the accounting period. Okay. So someone went down to the basement and told you you have 600 units on hand. So now we need to solve and calculate for my total cost of goods sold. Okay. So let's start from the very beginning. We need to tally up our totals. So how many total items did I purchase? So in this case, we're going to take a look at I purchased 1,000 plus 750 plus 200 plus 500.
$2,450.
2,450. Good. We also need to solve for the totals of my purchase price, freight, and total cost. So in this case, what's my total for my purchase price? If I have 5,000 plus 4,312 plus 1,200 plus 3,125.
Ah, 13,637.50.
Good. So again, you're going to do the same thing with your freight here. You should have 245. And of course, if you just add that to your purchase price, that should give you your total your total cost, okay? We don't need to tally up our totals here for our cost per item because this is what we're going to be using, okay? So let me go ahead and identify that this is going to be the numbers that you're going to be using for the rest of your inventory worksheet. Okay. So once again, we're going to be deriving our numbers to complete the second bottom half of my inventory worksheet. So once again, my total purchases came from here and here. Okay. So again, I'm going to highlight this yellow so you know that that total bar up there, these are the numbers that are that I'm deriving the numbers from, okay? Now your purchase returns and allowances. Right now, that's this section right here. I didn't have any returns or any allowances. Okay, so right here. So in this case, I have 0. So in this case, let's see. Now I know for a fact that my returns and allowances is going to reduce my purchase expense. So in this case, that's exactly what the formula is going to be. It's going to be purchases minus, as you can see right here, it tells you what to do here, minus your returns and allowances to get a subtotal of 2450, right? Because I didn't have any returns. So at the end of the day, your purchases is going to stay the same, right? For 13,637.50. Now freight adds 0 to quantity, but it does add to cost, right? For that $245. All right. So again, because they add to the value, right? You're going to take your 2450 plus 0 will give you 245 because we already know that this is freight. Freight doesn't add to quantity, but it does add to the total cost. So in this case, we're going to add these two values together. And this is where you're going to be using as a way to match your inventory, right? Say your total cost should equal that. Now, when we have returns and allowances, that's no longer going to be true, right? So here you go. So then, now that we have our net purchases, right, we're going to need this number to transfer out to another part of the worksheet, right? So in this case, do I have beginning inventory? Do I have beginning inventory? No, you don't, because we didn't have anything prior to April, right? We didn't carry anything over, so I don't have any beginning inventory. So therefore, this is 0. Right? So how would I know if I have beginning inventory is if I use the inventory on hand section right here. So I didn't carry anything over, so my assumption is I don't have any beginning inventory. Okay? But I do need to carry down my net purchases that I calculated from above. So that's where this is going to be green. Okay, so you know where that number came from. Okay? So in this case, okay, now I need to solve for my goods available, right? I need to add these values up together because that's the formula, right? Your total goods available is going to be your beginning inventory plus your net purchases. So in this case, 0 plus 2450 is going to give you 2450. And again, 0 plus 13,882.50 is going to give you 13,882.50. So again, usually if you don't have beginning inventory, your net purchases will become your goods available. Okay. And then of course your ending balance If you started out with 2,450 units and you were told that you only have 600 units left, your assumption is how many items did you sell?
$1,850.
Good. Okay? Because again, if you had started out with 2,450 units and all of a sudden you just only have 600 left, then your assumption is you must have taken out and sold 1,850. Okay? So I'm going to go ahead and build my table here. And I'm going to show you this. I think I made it orange last time. Okay? This is where we're going to be calculating our cost of goods sold. Okay? Because we need to know how much it's going to cost me to sell all 1,850 units. So let's take a look at my inventory. How many items do I actually have left in my inventory? Or how many items do I have available to sell? I have exactly 4. So that's exactly what I'm going to do. I'm going to do 4. Okay? So, I'm going to build my table here, okay? And I'm going to call this cost of goods sold. And what I'm going to do is I'm going to do a running balance. So again, the equal sum, right, which I taught you yesterday, the equal sum formula is going to allow you to add up all the numbers in a column, in a row, whichever how you put the formula as. So in this case, this is going to give me a running balance. So every time I type something in here, it's going to calculate for me. So for example, 500 plus 600 plus 300, right? It's going to give me a running balance. So then I don't have to calculate it all manually by myself, right? I'd be able to figure it out very easily, right? And again, I copied that formula across. So that means it's also going to calculate my grand total sums at the same time. Okay? So looking at my batches of inventory, if I'm using Lifo, which batch of inventory am I going to sell from first?
April 25th.
April 25th, this 500 units, right?
Mm-hmm.
So in this case, 500. I'm going to go ahead and copy that there. Okay. Now, how much is it going to cost me per item for this 500 batch?
$6.35.
Excellent, right? We need to identify that it's the cost per item, not what you paid for, right? Not the
Right.
purchase price, because in this case, the purchase price is what you paid for just getting the inventory item. We want to include every single cost in the cost of goods sold, so when we sell it to our customers, right, we're having them cover our cost 100%. So in this case, we're not looking at the unit price of $6.25. We're looking at $6.35, right? Because we want to include that as part of the cost of inventory. So in this case, it's going to be $6.35. Now in this case, do I need to calculate this? If I already know if I'm going to get rid of all 500 units, do I need to calculate this?
Yes.
In this case, how much is it going to cost me to sell all 500 units? What's my total cost?
It's $3,175.
Exactly. So in this case, because I'm taking out the entire batch of inventory, I don't need to calculate this because it's already here for me. So all I'm going to do here is just copy that it's going to cost me a grand total of $3,175. Now, let me tell you this. Do not remove anything on here. Why? Because again, if you do, because I use cell referencing, it's going to mess up all of your formulas that you have put in already there. So for example, right, I just sold my 500. If I get rid of this and say it's now 0, my formula for my total cost, my total quantity has changed. It also has changed here. It also has changed here. It also has changed here. And it also has changed the formula here too. So in this case, you see how cell referencing could be a great thing, but it can also be very dangerous if you accidentally eliminate content that is involved in that formula. So in this
Right.
case, I have to leave it in there. Now, how do I get rid of it and not see it? Well, you can block it out or you can cross it out. Okay, so in this case, I can strike it out. Let me out.
So you can't give that particular column and value.
What do you mean?
Like so you say if you put in like if you put in the zero, it's gonna mess up the formula. So
Correct.
you can't get that cell of value. So that's why you exited that out.
Yes, correct. Because I used it for the formula to add up all of my items, right?
Right.
So in this case, I cannot change anything because I'm cell referencing. Because I'm using Excel to calculate all these formulas for me. So these numbers, once you have placed it in there, you cannot touch them afterwards. Okay. Now, if you want to, and this is what we're going to do for the Chapter 5 review, is build a table so then you can eliminate all of those if you're a visual learner, right? If you need to physically take it off, then go ahead and build your table that way, right? So here, I sold my first 500 units. I need to sell 1850. I have a long way to go. So which batch of inventory am I going to sell from next?
April 20.
April 20 at 200 units, right? Am I going to take all of it or some of it?
Some of it.
You're only going to take some of 200?
No, I'm gonna take all of it.
You're going to take all of it. So therefore, it's going to cost me a grand total of 1220. Okay? So I'm going to get rid of all of it. And all of it currently is at $6.10. Now, why am I referencing the cost per item if I'm not going to calculate it? It's just so then I have a reference point so I know that this is what this batch is going to be valued at, right? It costs me $6.10 per item for these 200 items, and it's going to give me a grand total of $12.20. So far, I've sold 700 units at $4,395. I only sold 700 units. I need to get a total of $1,850. So that means I have to keep selling more, right?
Right.
So what's the next one that I have to sell from next?
April 10th.
April 10. Now, am I going to sell all of it or some of it?
All of it.
You're going to sell all of it, right? Because right now, even if you did your calculation, right, to figure this out, I need to get to 1850. I only sold 700. If you want to do your math here, 1850 minus 700, I need 1,050 left. Now, in this case, my batch of inventory only has 750. So that means I can only eliminate 750. Okay? 750 at $5.85, which gave me a total of 4,800 or $4,387.50. Okay? So now I'm at 1450. How many more do I need to sell to get to 1850?
Another 400.
Another 400, right? Now in this case, I only have one batch of inventory left. What's my cost per item there?
It's uh going to be $5.10.
$5.10. Okay.
All
Now,
right.
here's the difference. Am I selling all of it or only some of it?
Some of it. You're only selling the 400 out of the 1,000.
Exactly. So in this case, I need to calculate what that total cost is by using the per cost per item, right? If it costs me $6.10 for every item that I sell from that batch of 1,000, I'd have to actually calculate this. So in this case, 400 times $5.10, how much is that going to give you?
$2,040.
2040. Okay, so here I finally reached my grand total of 1850, and because I had the equal sum formula to constantly calculate my entire column for the for the total cost here, it cost me $10,822.50. And that's exactly where I'm going to plug this value in. Okay? So then now, at least I know this, right? I have some remaining in my first batch of inventory, right? You could
Right.
even build your small table here if it's something that you want to do, to just so you can measure out what your ending inventory is. It's up to you if you want to do that. Not required. Right? We know that we have 600 left, right? Because you could take their 1,000 minus 400, you're going to get 600 units left, right?
Right.
And you know that it costs you $5.10 per item. So in this case, you could choose to do this and calculate it here, that 600 times $5.10 is going to give you $3,060. Or, like I mentioned before, a quick and easy way to do this is you could take your goods available of the 13,88250 and you can subtract out your cost of goods sold of your 10,82250, and you're going to get 3,060. So you're going to get the same answer regardless of whether you completely calculate your ending balance or whether you calculate it using the goods available. So again, here you go. I'm going to calculate that so you know where this number came from. Okay. All right, so that's us finishing our inventory worksheet. All right, and this is Lifo, right? In this case, Lifo had us end with our beginning balances. Now, you're going to start noticing a trend. From the first one for FIFO, right? We started from the top and slowly made our way down to the bottom batches of inventory. That is the rules of FIFO. For LIFO, what you're going to notice is you're constantly going back from the bottom and slowly making your way up to the top. And if you figured that method out already, then you might be better off solving your ending inventory versus your cost of goods sold. Okay, so you can solve for either one. If you find that solving for your ending inventory is much more easy, then you can solve this in a click of a button. So again, if you knew that, right, your ending balance is 600, and you knew that if you're using LIFO, you're gonna get rid of from bottom to top. So at the end of the day, you're gonna recognize that the very first of inventory that you're gonna be having is going to be what's left remaining. So if you could figure that out, right, and know that you have to have 600 units and the cost per item is $5.10, you can easily solve for your ending inventory which is your 3,060. And instead of having to go through all of this for your cost of goods sold, you could take you do the same formula here, where you could take your goods available minus your ending inventory, and you could easily solve for your cost of goods sold much more faster. Right? Either way that you do this, as long as you get to the correct answer, I don't care how you do it. Okay? Because in this case, I'm teaching you how to use the costing method. So in this case, this is how we utilize Lifo. Is we're going to go through each batch of inventory and we're going to sell them one at a time in a particular order. But if you found another way around it, then as long as you get the answer, is it doesn't matter how you get there. As long as you get the same exact answer as me, then you're good to go. All right. So again, if you account, that's the beauty of accounting, is there's so many different methods that you can use, but as long as you can get to the same answer as me, then you know you're doing something right. Okay. So now that we finally finished this, did you have any questions?
No.
Okay. All right. So now that we completed our inventory worksheet, we now need to plug in our conversion entry. Okay? So we know it's April 30th. What do I recognize from my conversion entry?
Cost of goods sold.
Cost of goods sold. What else?
Purchase expense.
Purchase expense.
Your freight expense.
Okay, there's one more.
And your inventory.
Okay, inventory, where does it go? At the top or at the bottom?
At the top.
Okay, good. And is that your ending or your beginning inventory?
It would be your ending.
It would be your ending. Good, correct. Now in this case, there is no beginning inventory, so you don't need to identify if this is ending or beginning, but just know that it is the ending inventory. Now, again, I did not tell you specific items that I purchased, so in this case, I'm going to put it all into inventory. But for the example that we had in the PowerPoint, I actually told you that I bought toys. So in this case, when you transfer it into inventory, you're going to identify it by the item of what you purchased. Okay? Why? Because inventory is such a generic account, right? Anything could be considered inventory. But when you have a specific item, right, especially if you're functioning as a store that sells multiple items, it would be great to identify the items that you have in inventory. Okay, so in this case, what was my ending balance in my inventory?
It was 10,822.50.
That's going to be what I sold. What is my ending balance?
Uh, uh, 3,060.
Yes, so in this case, the total value of my ending inventory was $3,060, right? I've already identified what my cost of goods sold was, which was the $10,822.50. What was my total purchase price?
It was 13,882.
That includes freight. We have to keep our freight separate. So what's my total purchase price?
13,637.50.
Good. And then what was my freight?
245.
Good. So in this case, rule of thumb, is to double check and confirm that your total debits match your credit. So we got 13,882.50 on the left, 13,882.50 on the right. So in this case, wonderful. We match on both sides. And then you could also put a note here that this was a conversion entry. For periodic inventory. And then you can even identify ending balance of 600 units and sold 1850 units. Okay? Awesome. All right, any questions so far?
No.
No.